Hold on to your hats, folks, because things are getting wild on Wall Street. Today, we witnessed one of the most volatile trading sessions in recent memory. The market was a whirlwind of activity, with stocks swinging wildly from gains to losses and back again. Traders were on edge, their eyes glued to the screens trying to make sense of the chaos unfolding before them. Today was a roller coaster ride, with the market getting slammed on worries about, well, everything. From geopolitical tensions to fears of an economic slowdown, it seemed like every piece of news was another twist in the ride. Investors were left reeling, trying to navigate through the storm of information and make the best decisions for their portfolios. We're talking about the economy, interest rates, and even the possibility of a national economic emergency declaration. The Federal Reserve's latest comments on potential interest rate hikes added fuel to the fire, causing even more uncertainty in the market. Analysts were quick to weigh in, offering their takes on what this could mean for the future of the economy. Yeah, you heard that right. The mere mention of an economic emergency had everyone on high alert. The fear of the unknown was palpable, and it was clear that no one had a definitive answer on what would happen next. The market was in a state of flux, and everyone was trying to keep up. It's enough to make even the most seasoned investor a little queasy. The constant barrage of news and the rapid changes in the market were overwhelming. Many were left questioning their strategies and wondering if they should make drastic changes to their investments. But don't panic just yet. While the market's volatility can be nerve-wracking, it's important to stay calm and not make hasty decisions. Financial advisors were busy reassuring their clients, reminding them of the importance of a long-term perspective and sticking to their investment plans. We're going to break it all down for you, step by step, so you can understand what's going on and, more importantly, what it means for your money. We'll look at the key factors driving the market's movements, analyze the potential impacts on different sectors, and provide insights on how to navigate these turbulent times. Buckle up, because we're diving headfirst into the wild world of Wall Street. Whether you're a seasoned investor or just starting out, understanding the market's dynamics is crucial. So, stay with us as we explore the highs and lows of today's trading session and what it means for your financial future. Let's start by checking the scorecard of the market, looking at our major indexes. The S&P 500, our broadest measure of the market, took a serious hit, dropping by insert percentage today. Ouch! The tech-heavy Nasdaq Composite, which is full of those high-growth companies everyone's been talking about, got hammered even harder, plunging by insert percentage. And the Dow Jones Industrial Average, well, let's just say it wasn't spared either, shedding insert percentage. These numbers paint a pretty clear picture. Investors are selling, and they're selling fast. But why? What's got everyone so spooked? Let's dig a little deeper and find out. One word, emergency. Okay, maybe that's simplifying things a bit, but the rumor mill's been churning over time with talk about a potential national economic emergency declaration. Now, I know what you're thinking. Economic emergency, what does that even mean? Well, it could mean a lot of things, and that's exactly what's got investors on edge. It could mean new tariffs on goods from other countries, which would disrupt global trade and potentially hurt corporate profits. It's like a dark cloud hanging over the market, and nobody knows for sure when or where it might burst. Meanwhile, let's talk about the 10-year Treasury yield, which is like the canary in the coal mine for the economy. This little number tells us how much investors are demanding to lend money to the US government for 10 years. And guess what? It's been climbing higher lately, which usually means investors are getting nervous about inflation and the future. Why is this a big deal? Because a higher 10-year Treasury yield can make it more expensive for companies to borrow money, which could slow down economic growth. It's like a domino effect, and right now those dominoes are starting to fall. This is Section 5, the rate cut roller coaster. Will they? Won't they? Remember back when everyone and their brother was certain the Federal Reserve was going to cut interest rates? Well, hold on tight, because that roller coaster just took a sharp turn. The Fed's been dropping hints that they might not be so quick to cut rates after all, especially with inflation still lurking around. This has thrown a wrench into the plans of many investors who were banking on those rate cuts to boost the market. Now they're left wondering what the Fed will do next, and that uncertainty is breeding even more volatility. Section 6, Data Dive, Jobs, Services and Clues for the Economy. In this section, we will delve into the latest economic reports and what they mean for the broader economy. We'll break down the numbers, analyze the trends, and try to make sense of the mixed signals we're getting. Okay, let's talk data, people. The numbers are in, and they're painting a complex picture. From job reports to service sector performance, there's a lot to unpack. We got some important economic reports recently, and they're giving us a mixed bag of signals. On one hand, some indicators are showing strength, while others are flashing warning signs. The December jobs report showed insert key figures like unemployment rate and job growth, which is crucial for understanding the labor market's health. A lower unemployment rate generally indicates a strong economy, but we need to look deeper, which tells us insert interpretation of the report's implications for the economy. For instance, if job growth is robust, it could mean businesses are confident and expanding. However, if wage growth is stagnant, it might suggest underlying issues. Meanwhile, the services sector, which is a huge part of the US economy, has been insert recent trends in service sector data, for example, expanding/contracting. This sector includes everything from retail to healthcare, and its performance can be a bellwether for overall economic health. And let's not forget about private hiring, which insert recent trends and their implications. Private sector hiring trends can give us insights into business confidence and future economic activity. See what I mean? It's a mixed bag, with some data points suggesting growth and others hinting at potential slowdowns. This makes it challenging to get a clear picture, and it's making it tough for investors to get a clear read on the economy's direction. Investors rely on these reports to make informed decisions, and when the data is conflicting, it adds a layer of uncertainty to the market. So, what should we take away from all this? It's essential to look at the broader trends and not get too caught up in any single report. By understanding the bigger picture, we can better navigate the complexities of the economy. Stay tuned as we continue to break down the data and provide insights to help you make sense of the economic landscape. Remember, knowledge is power, especially when it comes to understanding the economy. Section 7, Fear on the Street, Sentiment takes a hit. So what does all this mean for the overall mood on Wall Street? In a word, fear. Yeah, there's a lot of it going around right now. Investors are worried about a potential economic emergency, rising interest rates, and conflicting economic data. And when investors get scared, they tend to sell first and ask questions later. This fear is palpable, folks, and it's driving the market down. But remember, fear can be a powerful motivator, but it can also cloud our judgment. Section 8, Tech Tremors, Why High Growth Feels the Heat. Now let's talk about those high-growth tech stocks that everyone loves to chase. You know, the ones with sky-high valuations and the promise of disrupting entire industries. Well, they're feeling the heat right now, and companies like Nvidia are getting hit particularly hard. Why? Because when investors get nervous about the economy, they tend to pull back from riskier investments, and high-growth tech stocks are about as risky as it gets. They're like the Ferraris of the stock market. Exciting to drive when times are good, but not so much when there's a potential economic storm brewing. Section 9, Navigating the Storm, What Investors Need to Know. In this section, we will delve into the essential strategies and insights that every investor should be aware of, especially during turbulent times. Whether you're a seasoned investor or just starting out, understanding how to navigate the financial markets is crucial for your success. So, there you have it, folks. The financial landscape is constantly evolving, and staying informed is more important than ever. With the right knowledge and tools, you can make informed decisions that will help you achieve your financial goals. The market's in a bit of a tailspin right now, driven by a toxic cocktail of economic uncertainty, interest rate worries, and a healthy dose of fear. It's a challenging environment, but it's also an opportunity to reassess your investment strategy and make adjustments as needed. But before you run for the hills, remember that volatility is a part of investing. Market fluctuations are inevitable, and they can actually present opportunities for savvy investors. The key is to stay calm and not let emotions drive your decisions. It's like a roller coaster. There are going to be ups and downs, but it's how you ride them out that counts. My advice, don't panic. Instead, take a step back, review your portfolio, and consider whether your investments align with your long-term goals. Stay focused on your long-term goals. And if you're feeling unsure, don't be afraid to reach out to a financial advisor. They can provide valuable insights and help you develop a strategy that's tailored to your individual needs and risk tolerance. Remember, knowledge is power, especially when it comes to navigating the wild world of Wall Street. Educate yourself, stay informed, and don't hesitate to seek out resources that can help you make better investment decisions. Now, go out there and make some money. With the right mindset and a solid plan, you can turn market challenges into opportunities and achieve your financial dreams. Happy investing!